folks, again, huge week for earnings. Some of these names could actually move the markets depending on what happens after the bell today. We're following kind of the splash and trash trades with Whirlpool and Waste Management. They will release their quarterly reports. Today's countdown closer is focused on 3 industrial names. Washington Crossing Advisors Senior Portfolio Manager Kevin Caron is here. He manages $11 billion. Okay, so this week investors are awaiting earnings from the Mag 7 names. They get all glittery-eyed about the fact that it's Apple and Amazon, Microsoft, Meta, and Alphabet. But you say, for the moment, look at these names. What are the names? And they're kind of gritty, are they not?
Yeah, so this has been a hot market. Last 6 months, you've had the biggest gain in equity values ever. $16 trillion is an enormous gain. But we've now gotten to a point where we really need to see the growth spread out. And we think at Washington Crossing, you're going to see names like Cummins Engine, or Grainger, or ADP. These are more quality names. They're less glitzy. They don't have that big growth dynamic that AI does, but they all have fantastic balance sheets. And we think these stocks can double in the next 5 to 10 years and pay out a very nice dividend along the way. Okay,
so 5 to 10 years. But at the moment, if you look at the Cummins, the yield is at 1.9%. I mean, you could get a master limited partnership right now for 7%.
Sure.
Why Cummins instead?
Well, Cummins is investing back into their business in some very exciting areas. It's not only the engines, but it's also power. And this is a company that's going to grow, and the dividend should grow along with it. So the dividend growth is very important. The stability and quality of this company is second to none.
Grainger, GWW, fascinating company. No. And yet, most people would say, well, wait a minute, it's not as exciting as an NVIDIA, something like that. You got to get the investor audience right now. Do what you need to do to get them to focus on names that are outside of that tech purview.
Sure. We've followed this and wrote a piece recently on our website at WashingtonCrossingAdvisors.com that looks at consistency. And consistency hasn't been cool the last few years, but that's what we do with these kind of companies. We're looking for stability, not so much glitzy growth and high valuations, but we want consistency. So if you look at Grainger, Grainger has pulled back, an excellent franchise. You've got capital goods spending here in the United States. This is new orders for capital goods. That's hitting high after high after high. Businesses need to invest, will invest in the United States. As it broadens out, it's going to benefit Grainger substantially. We like Grainger. We think that stock can double.
Well, yeah, but again, they repair and operating products, services primarily in North America, but they are a global business as well. I mean, service, woo! But yet, I'm not dissing. I love Grainger because I think this is one of those companies that you can't live without when you're talking about being a consumer or a business.
You look at American business, you're talking about Grainger. It's got one of the most diverse pipelines of customers of any company out there. If you're a small, medium-sized business, state, local government, you are likely buying your product from Grainger.
Kevin, you and I have talked for a long time.
Yes,
this is a long bull market. We are on pace for 3 records, the Dow, S&P, and NASDAQ, and a bunch of names right now trading at record highs. How long do you expect that this bull market will last, or when does it get a little gray around the temples?
Well, you never know, but we have had a huge rally in the last 6 months. So what we're hoping to see is that it broadens out. When you look at the value of U.S. stocks, we're at $70 trillion. We've got $20 trillion in private equity, also known as formerly public companies. So you've got an enormous amount of equity value here in the United States, and the momentum continues to roll. So there's no sign in our macro work at Washington Crossing that suggests that things are cooling off just yet. But we would caution a little bit about the valuations. And if you remember that there are many more companies out there than just the Mag 7. There are a lot of opportunities to buy companies that are further down, maybe not as glitzy, maybe not the popular growth names, but I think you can buy quality at reasonable prices.
Kevin, great to see you. And look, we got confetti for you here. The S&P, the Dow, the NASDAQ close at record highs, second session in a row. Folks, money coming off the sidelines. Stocks moving higher. Even the transports are up 212 points. We're going to see you tomorrow. Don't miss it.